video is for the first week of September, and today is Sunday, August 27th. So let's head over to gold analysis for the first week of September. Alright, so we're on the weekly time frame. As you all know, that's my favorite highest time frames. So the first thing is to draw your trend lines, the higher lows and higher highs. So now this is for my last video. I was contemplating on two scenarios happening on the 4-hour time frame, whereby if it breaks market structure, we're going to experience a pump, and if it doesn't, we're going to fall to this level here. This was my target. So last week I was more bearish, but when I saw the market structure shifts or change of character, in fact, gold just exploded. And unfortunately, I didn't catch the whole move. I missed a good portion of it. But you know, that is how trading is. So this was the explosive move, and here is the change of character we had last week. So I like to use the bodies for it because it looks more cleaner for me. This is it. So then also for ease, I like to make then yes, so this is what I want. So this was our change of character, because if you should draw the trend line, gold has been expecting this trend line for a very long time. In fact, I enjoyed this move, to be honest with you. I enjoyed this move massively because in fact it was so easy and predictable. Anytime it comes to a trend line, you sell, and it was just working like magic. So the next thing, now when gold has changed character, what are we to expect? So let's start from the weekly time frame, as I said. So there's something to see on the weekly time frame. Here we have an order block below. Then why is gold bullish? Now I don't know about the fundamentals, but the technicals is what I know for sure. Now what do we have here? We have a bullish divergence, and this divergence is a very strong one. It's not just it's the strongest form of RSI divergence. And what is the strongest one? When price is making lower low and the RSI is making higher highs. Is the strongest form of divergence, because both of them are not in agreement. You can see it's very clear. This is the strongest form of divergence. Now, good news was that this week we closed above the previous close here. Now let me mark it out for you. And let's make this to change it to green, or let's say white. Okay. And to make it straight, copy the first one and paste it in the second. Always make sure it's up. Yep. So this is how it looks like now. We closed bullish, and that is in fact a very good sign. So go over to the daily time frame. Now this short spike down, I caught it that month, and in fact it was so sweet. I think I made about $7 something from it. Though my net profit that day was 49 because I had some losses before then. You have to consider the losses in trading. Those are. Now, what do you see here? We saw that it was a huge sell-off down, price wicked up and closed above that weekly close. You see the reason why I prefer close more than the body for my support and resistance or that kind of stuff. So because the close, in fact, I've noticed that price respect the close more than the wicks. I use the wicks for take profits, but not for drawing my support and resistance line. That is just my observation. So then we'll go back to the 4-hour time frame. This was where now I had an entry here, and in fact this was actually very painful. I had a limit order set here, but when I saw the magnitude and the speed at which gold was falling coming into that zone, in fact I was terrified. So I shot it from somewhere here and took profit out. So when I saw how fast it was going, in fact I had to close my limit orders out of here, and in fact that was terrible. I was not risking more than, but for the fact that I don't want to blow my funded account challenge. In fact, I have actually had some serious losses that carried my account in Jordan, so I was terrified. In fact, now this is, if you draw the trend line together, you see that's okay. So this is another block here. Now you have to take note. I've noticed that some brokers are in fact doing some shady business with the chart. Now let me show you something. The same other block over here is missing. So in fact, you have to be the chart you're using. You have to be very careful for your analysis, because if you didn't know that, you will not take note that there was another block here because of the color, and it will look very different. It will look very strange because what made price to suddenly get to this zone and stop. And if you know what another block is a zone where there are a lot of orders by large players in markets, banks, financial institutions, those big guys with big ones, those are where they place their orders. That is why when price gets to that level, in fact, the reaction is very, very, very spontaneous, very, very fast. Then after that, what you notice again is it's a buy trade for gold. In fact, they're stacking up. First of all, a weekly divergence, very, very strong one. Then we had a weekly close above the previous candle, second one. Now on the 4-hour, on the daily time frame, price respected that close. You saw them. It close above it, which is good. Now somebody might see this red candle and think, okay, it closed lower, thereby we're going to go bearish. Now on the 4-hour time frame, price weak into another block. That could have been a perfect entry, but anyway, that's how it is. So now if you know what is a bull flag, you can see a bull flag here, and a bull flag is a continuation. It's not the best example of a bull flag, but it's pretty okay. Now the reason why I say it's not the best example because of the long wicks. So what you do, if you want to see clearly, remove the wicks and it becomes very, very clear. So now how can you take a buy trade? What are your entry criteria for it? Now it's very, very simple. Draw your trend lines, your diagonal trend lines. Then you also look for a major resistance level. If you can break that resistance level, then we got to an entry. So we'll go over to the 1-hour time frame. Now for this you should use the 1-hour time frame. That will be better for your entry. Now this is where we'll wait for gold to break. If gold can break above this level, then yeah, that's where we're good to go, according to crypto traders to the moon. So that is what I'm seeing for gold. So yes, then you can label it as this BOS reconstruction. Yeah, this is what I want. Okay, so this is what you should see. Now for the trend line, just to make things look better, you can create like this. Yes, right. Yeah. So what we're expecting for our entry is break of this trend line, and the major trigger is if price can close above this BOS line. That is your major entry. So then for take profits, that's what we all want. The most interesting part of the trading journey is, now for my take profit I use two methods. One, the 4-hour time frame. Now for take profit, gold is very volatile. So what I do, and I started doing recently, is that I started targeting the wicks. Before I use the body as my take profit, but I found out that I'm leaving some money on the table. Now not just all kind of wicks that I use. If the wicks are extremely too long, I ignore them. But if they're just moderately okay, then I use them. Like this one, since we're in uptrend, this wick is going to get taken out. It's a must. Why? Because for this wick to be created, where a lot of sellers have pushed the price down and their stop losses are above this wick, or some of them must have moved it to break even, because those people that took this massive short here, most of them should be day traders. The day traders must have taken their profit out. So we are targeting those swing traders who still left their position open. So the wise ones must have moved theirs to break even. The ones who, let me say, I will not say the foolish ones, but depending on their preference, some would have left their stop loss open, and in fact they are exposing themselves to the coming risk. So now all we want is for a break of structure here. Then you can look for a 5 minutes, 15 minutes order block for your entry. Then you target this. This is one. So I like to label this as liquidity. Yes, because why? That is where there is money. Money is there. So you can duplicate it again to the next liquidity zone, and just those are your take profit vision. Then if this is looking very confusing to you, what to do? If you are unable to identify them, go over to your daily time frame. The higher time frame, it makes this look very easy. Then you are targeting those wicks above. Those are the wicks you're targeting. Therefore, where should you take your overall profit? Now I believe when gold gets to this region, there will be a lot of volatility and in fact confusion in the market. When it gets to this, because there's an order block here, I think they call this a breaker block. That is the name. So there's a breaker block here. Now don't get confused about this language. Previously I knew this place, this level, as a neckline. And why this looks like a double top with the neckline. So you can target the neckline as your overall take profit. But just to be safe, what you should target, because gold does not move in a straight line. You will see a lot of random zigzag movements. Let me go over lower time frame. So this is what you are going to see. It's not going to be a straight line, so this will be better for people who are scalping gold. Not really like scalping, but more of like intraday traders. Those are the people that. So this is kind of move we should expect for gold. Up, down, massive push up, down, and another massive small push up, just like that. Then who knows, we might see a double top during this region here, but my target is here. This is where I would expect to wait for additional confirmation before any other thing else. So if we should go to the weekly time frame, you see that it lines up perfectly with the neckline here. So this is where we are going to expect another break of structure here at this neckline. So for this case, you should be patient until you see the confirmation first before you can start thinking of entries. Otherwise, gold can just switch direction and continue going down, or you can break above. So for this trade, it might take 1 or 2 weeks. That is my time frame. I expect gold before it get to this level. 1 week is very possible, 2 weeks is very likely, but we'll just keep our fingers crossed. And that is all. So let's see the risk to reward ratio for both swing trading and scalping. Let's see. Honestly, I love swing trading, to be honest with you, but it's very, very difficult to hold that long when you see your profits going back down. But that is very, very painful, because to get an entry is difficult, and to get a profitable trade, in fact, is an apple. So for gold, let's see if I get a very clean entry on 5 minutes time frame. My stop loss is usually 115 pips or 150 pips. This is what I normally use. So this is usually my stop loss. Only I use smaller time frame for entry so that my risk to reward ratio is good. So first target, you are getting 7.9. Second target 18.8. Wow, that is nice. Then third target is about 23.3. So from that break of structure to the third target is a $35 move on a 0.01 lot, like on a 0.01 lot size, which is okay. So I think that's all. If you want to see, check my video on US 30 analysis for this coming week, and maybe some other ones. Right, I'll catch you next one.